Hi, I'm Beth from Family and Community Services, Consumer Credit Counseling. I'm here to talk to you today about credit and how the credit score works. So, the first part of it is 35% of your credit score. It's the payment history. So, if you have late payments, judgments, bankruptcy, and tax liens, it's going to lower your score. The next part is 30%. And that is the amounts owed. If you max out your credit cards, it's definitely going to lower your score. The rule of thumb is that you don't want to charge more than a third of what your credit limit is. Once you reach that point and cross that line, the creditors will find risk and begin raising your interest rates. The next part is the length of credit history, and that is 15%. So if you have long relationships with banks and credit unions, it's going to have a positive influence on your score. The date actually shows up on your credit report that you opened that account. So many years of current activity is going to be positive. The next part, it's 10%. It's a small amount, but it can be pretty significant. That is new credit. If you have applied for too many lines of credit within a short period of time, it's going to lower your score. Each time you apply for credit, it nicks your score. The last part is the different types of credit in use. That's 10%. It can also be pretty significant. If you have too many open lines of credit, like credit cards, the retail accounts, installment loans, mortgage accounts, vehicle loans, it can lower your score. Loans from finance companies generally will lower your score because of the nature of those. They're more of a predatory type of lender. And especially if you have no other types of credit reported. Um, the types of credit in use too, even if you have zero balance on your credit cards and you have multiples, you would have the opportunity of charging up to max out those accounts. So that's another reason why you could be denied for credit, because you have that availability. And a creditor may feel like you couldn't follow through with their obligation if you in fact did that. So they could deny based on that. So the accepted rankings for credit scores, excellent is the range that you want to be in. You would have the best rates in finance charges and the best options in lending. That range is going to be 720 to 850. Good is 640 to 719. And chances are you're going to have a loan go through. You may pay a little bit higher interest rate, but you should be able to get a loan to go through. Fair is 550 to 639. That is getting into the predatory area where you're going to pay a much higher interest rate, and the terms of the loan probably are not going to be the greatest. The poor range is 540 and below. If, in fact, you have a score in that area, I wouldn't recommend even applying for credit, because you would end up in a predatory loan, which is very high risk. You would have a very high interest rate. It's just not a good thing to get into. Your payment would be much larger and less affordable. Now, you can check your credit score through Creditkarma.com. You just need to sign up with an email address and a password that you won't forget. You can check your credit reports for all of your accounts on TransUnion and Equifax, and you can get those scores as well. They also have great tools for credit building and recommendations. You can also file your taxes there. So it's a wonderful website. It's totally free, and I would recommend it to everyone so that you can monitor your credit and know where you stand. If you would like to have a sit-down conversation with me regarding credit or to go over your debt, please give me a call at 330-297-0080. And I am at 705 Oakwood Street, Suite 118 in Ravenna, part of Family and Community Services. Thank you for listening and watching. I hope for the best success with your credit. Thanks. Bye-bye.